Welcome back for another weekend deep dive. My name is Justin, and this weekend we're going to try to figure out whether or not the Nasdaq breaking 15,000 is going to mean more gains. We have big tech in focus this week. We have Tesla, Apple, Facebook, and Amazon reporting earnings. We want to know whether or not they're going to drag us further into the promised land. We can note here that we got the Nasdaq above 15,000. We got the Dow Jones above 35,000. And we got SPX above 4,400, all making new all-time highs. Sorry, the Dow Jones is testing its previous all-time high, NDX new all-time high, SPY new all-time high. So on this weekend's video, we're going to try to figure out whether or not these trillion-dollar companies are going to drag us even higher. Sorry, Tesla's not a trillion-dollar company. Facebook just joined it. Kudos, Facebook. So this next video for this weekend is going to be about all that. As a reminder, we do have a show schedule. My name is Justin. This is Stock Market Today, and I want to thank you for your support in supporting our channel to get bigger. What I want to do is this. I want to set a milestone that every time we hit a certain number of subscribers, we're going to give you guys more prizes. So this last weekend, you guys supported us. Our #1 video so far, 2.4 thousand views. Thank you very much. Also looked like it was pretty accurate. Stock market did crash again one more time, right? One day crash and then went back up. So this weekend we have Brooks as the winner. His video here says, "Sweet Goldman, make my stonks go up." Thank you, bro. These videos are so underrated. Brooks, you won a $100 Amazon prize. So I do want to circle back on Brooks's comment, but when we hit 750 subscribers, I will give away another $100 Amazon code. So again, what I encourage you to do is to smash a thumbs up to support our channel, drop a comment, and again, the one that gets the most thumbs up will have a chance to enter. Thank you very much, Brooks, and thank you to all of our new subscribers. So touching on Brooks's point here earlier, what did Goldman tell us? Goldman Sachs told us that don't bail on big tech giants because of antitrust fears. What do? Up, 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 up. Up. Ain't no party like a bull party. As we look here, year to date, though, the question for me is, are these blocks going to turn greener, right? Tesla's not even green year to date. It's been a drag since it was added to the SP 500. Amazon's only dark green here, representing only about 10% year to date. It's only returned, the S&P returns once so far this year, July 12th or 24th. Apple only one time. Look at Microsoft, 3 times. Google, 5 times. Facebook, 3.5 times. So as we go into this next week where we got these companies in focus, Tesla, Apple, Facebook, Amazon, are they going to deliver those earnings to drag the S&P even further into the promised land? NDX 16K, SPX 4,500, let's go. All right, let's jump through to our schedule here. So S&P summary at a high level. So like I mentioned, breaking through to key areas, 4,400. Here we got the Dow Jones at 35,000. And we got NDX here sitting at about 15,000. Popping over to SPY, which is the Spider Managed ETF, we can look here and see that we're further into the promised land. We've punched even higher. We came in for a 50 DMA backtest and we advanced again. So the simplest way to identify this is kind of what we talked about on last weekend's video and what I talked about on Monday again specifically. So we started going sideways, right? So we start going sideways, and then we have the plunge back down to the 50 DMA. I wasn't sure what was going to happen. That move down into Monday happened, the move here happened in a Monday, then Tuesday, Wednesday, Thursday, Friday, right back up. So stock market crash happened, right? Then it came all the way back up. The question for us here is, the big takeaways that I had were this. The reason why it looks similar was because of this move right here. We come down close to the 50 DMA, pierce it, close back above, and then we gap up and push, higher, low. Here we close the gap in a matter of 2 days. Here it took us 1 day, and then we just advance higher. So the difference here is just that this time we formed a W, and this time here, it appears that we are forming a W. I don't know, right? We could do that. We could also just start flattening out and just going sideways again, kind of like we did like inside of here. We could void this test and pretty much just hover around new all-time highs. So the big question for me right now is just that we've now punched higher. The question is, can we just like go sideways? We got $3.5 trillion in stimulus on deck, big tech earnings, and Powell's been steady right? Rock steady, right? Bebop and rock steady. He's been steady. I think we can trust this guy. And I think the reason why we're now at all-time highs on the key indexes is because we now have a safety of margin, which means that the first level of support is going to be on the previous all-time highs here. Second level of support at 435. Third level of support is going to be here at 430. Fourth level of support is now down here at the 50 DMA. So if there's variance scares, if there's whatever scare, we got 1, 2, 3, 4 areas of support. It's not that we can't take them down fast. It's just that we're establishing more support as we go higher. And in a liquidity-driven rally with more liquidity on deck, it's hard to not assume we're not going to go higher. So that's where we are. The heat map. All right. So here we are year to date. We have to see Apple, Amazon, and Tesla drag higher. Otherwise, I think we might stall out. And the reason I say that is because the QQQ is the easiest way to understand what's happening to tech along with NDX. And the reason for that is because NDX is just the index. QQQ is an ETF that is managed. XLK is the alternative. QQQ is just more heavily weighted towards Apple, Amazon, and Tesla. So we can note that collectively for that whole group, they've made a new all-time high. So same thing would apply here, where we have levels of support at the previous all-time high, next high, previous high. So we're breaking higher. And this should now be a strong area of support between 340 and 345. Oh, baby, that should be strong support in here in this zone. That should be strong. So if these companies deliver, we're probably going to not only go to new all-time highs, we're probably going to go higher here. And then SPY is going to start going sideways-ish. That's what I think is going to happen. That's my high-level overview here. So we're on the heat map. Going back to the heat map, so looking at year to actually what I want to do is actually zoom out for a 1-year performance here, because as we look back to like the 1-year performance, again, the laggard is still Amazon. So we got Apple, Microsoft, Google, Facebook, Tesla, all doing well here, but again, Amazon is only up 22. Facebook's a lot greener when you Apple's a lot greener when you look at it here. Greener than Microsoft, but Google is still king. So now we're going to look at a 3-month performance to see what the trend is starting to do. Okay, in the last 3 months, it appears that Tesla is stinky, and a lot of these are mixed now, right? A lot of these are mixed, but we notice that from the financials here, from credit services up to Microsoft and then over to Amazon, still bright green. Again, with Nike over there just doing it, and then otherwise it's a lot of mixed colors here. So the 3-month trend is now starting to show that there's been some rotation, mostly into big tech. Looking at the 1 month, right? Oh, energy looked pretty bad. Yeah, energy looked pretty bad right now. Energy does not look good. And then again, looking from credit services here up to Microsoft and over, it's pretty much the same theme. We see a lot more green here though. So in the last 1 month, it looks like there's more breadth and depth. And then looking at the last 1 week, meaning since like last Friday, again, we note that it's mostly green. It is concentrated in chips leading tech leading SPY. So that's actually a healthy rally. That's what we want to see. Options chain. All right, let's have a look at the options chain. I did a lot less work on this one this week just because I think that it's not that it's unimportant. I just don't want to spend too much time focusing on this because it ends up being like a 5 minutes of the video. Let me have a look here. So that's the wrong one I'm showing first here. I want to see the 23rd. Nope. No, so looking for the 26th. I apologize. This one here. Huge continuation on this volume here. So again, 147. There was like a million options traded on Friday's chain. It was so many. Looking here into Monday though, we have 147,000 here at 440. They're priced at about 80 cents, which implies we're going to be above 441 into Monday. Otherwise, they wouldn't be buying these. On Monday morning, we can see what converts into open interest to really get a better picture. But we're watching for this big volume here. It's continuation from Friday. Big continuation from Friday. More than 350,000 options traded there. On the bear side, it's notable, right? From 439 down to 435. Pretty even areas, right? Pretty even volume. We'll see if it converts. Over here, pretty much from 438 up to 442. Looking out to the 28th, which is when we have Powell speak. Let me go back to this one here. Sorry. They're just not in order properly. Again, here we see that 440 continuation. So the strike that has the most volume is, again, that 440 here. We see the volume from the same area, roughly 438 up to 442. And over here, we see the volume at the same area, right? 441 down to 434. It's pretty much the same. There's nothing hugely different here. Same thing into Friday, the 30th. So there's even more continuation here into Friday at 440, right? They love that 440. They love it, love it, love it. They love that 440. They're buying in roughly the same areas here. Again, 435 is now more notable. 438, not really that bad though, right? 184 over here is the value. 224 over here. This is the biggest strike, biggest dollars, biggest volume, biggest. Oh, I see you now. I saw that. I missed that earlier. We got 31,000 here with 20K in volume at 445. Oh, we noted that upper uptrend on the weekly was 447. So here we got 445.50 as break even for Friday on those. It looks like a spread too. After that, we have the August monthly. So again, all we're looking for here is just the theme for me this week is continuation. So melting higher, not pumping higher. And that's why when I look at this chain here, I note that we got nearly 100,000 in open interest now at 440. I'm looking at the premium. It's worth about $6, which means that 446 would be break even in the next 28 days to get to that August monthly expiry. It's all about 440. It's all about 440. So if it's all about 440, why are we fighting it? And we see open interest here. Nothing really huge though, right? 436 here is big. This is the insurance for the 440s, as we noted earlier, because this was the break even here. So this pretty much just offsets these ones here. And 445 is not huge, right? Not a lot of volume. So it appears that people think that up to 445. Over here, it's not insignificant, but again, over here, these are worth 6. These are worth about 6. So 42,000, that's worth about half the premium of these ones. They've also been burned dramatically, right? Burned, baby, burn, burn, burn. So if this is a straddle, that is still about $12 in premium here, which would imply 452 or 428. Not a huge amount of continuation here either, right? 436 has that same thing here. Looks like it's a straddle. Anyways, looking forward to September. This is where it gets a little bit interesting. So, looking at the flow for Friday, there was a lot of flow this week. I'm talking a lot. I don't want to focus on that. I'm going to focus on that in the private video. But looking here, there's a lot of flow for September. So with Powell this week, I think this is a lot of insurance. Again, big bets coming in here. So this is what the September chain looks like for the next 2 months. We can note here that there is again, 102,000 at 440 with about $9 in premium. So it's all about 440, literally all about 440. This time here, there's no straddle though. So this looks like a naked bet. And it does not look like it's a spread either because we only got 15,000 here, 20,000. That it looks like it's just a huge bet. And this is for September. So again, it looks like it's a big naked bet at 440, big number. Looking over here, we got 435 and we see 53,000 here in volume. So this 435 volume right here for September 17th is what we're seeing. So we got 419 and 435. So now when we look here, again, there's a lot of volume on here. So that's what we're looking at. Finally, for me, it looks like this is a spread. So we got 53, we got 40, and then that 419 below. So again, a lot of volume here. It looks like people are buying insurance is what it looks like. This is a spread. Pretty confident that's a spread. So we're just seeing that there's huge interest at 440. The option buyers wanted above 440 and then up to 450 into September, which would kind of feed into that story that I was mentioning at the beginning of the video where we kind of just do this. Kind of like we did here, right? We don't really go anywhere for a while, right? We just go like sideways up. Well, sideways up's fine, right? Get another punch higher on big tech and then just sideways for a month or two. Wait for Powell and Jackson Hole and then in September. So there we go. There is our options chain review. That pretty much covers that off. And now here we go. We're advancing. Seasonality chart. I've been paying less attention to that. I'm more focused on what headlines we're going to be getting out of the weekend. Notably, what's going to be happening here with senior U.S. diplomat Sherman to visit China amid strained ties. And the other thing we're looking for is an update on stimulus. So again, we know that Schumer said that there was supposed to be that, SCHMU. Chuck Schumer. There was supposed to be a Republicans sink Schumer's test vote on bipartisan infrastructure plan, but talks continue, right? So kicking the can once again. There's no vote. They got defeated, but the market's at a new all-time high, and I think that if stimulus got passed, that would likely make us go sideways to up. So I don't know what's going to happen out of here. I don't want to speculate. We're just going to look at what would be the base case, what would be the bear case, what would be the bull case. So there's potential with this, and then big tech earnings are my focus. So how am I doing for time? Actually pretty good, 15 minutes. That's not so bad, 15 minutes. I'm going to skip that. We're going to look here at the global markets and just see how they're shaking out. First thing I want to look at is this, and then we'll look at the DAX more specifically. So green, that's what we like to see, right? Green. Asia is a little bit less green. That's okay. Right? Europe is our closest counterpart. They're red here for the last 1 month, so more mixed, more the same. Almost getting back to green for most of them. So Euro stocks is down by 0.3, FTSE's down by 1.5, DAX is green, that's what we like. The CAC 40 is down by 0.8, and the IBEX is down by 4. Looking to the Americas, TSX here a little bit red in the last 1 month. NYSE a little bit red. Nasdaq pumping, S&P pumping, Dow pumping. 32, 37, 43, 32, 26% year to date, respectively. 24. These are still not bad, right? Year to date, they're still doing fine. 1 year change, they look fine. So no major red flags here, right? Asia's a little bit soft, but what else is new, right? They've been cracking down in China, so there's just some fear there. Can't really be surprised by that. When you see names down by more than like 50, 60%, yeah, well, we're gonna be a non-profit. Oh, so yeah, half haircut. Business going to non-profit. That's a sell signal. Yeah, overnight, right down. And then we look at stocks like Didi. Woo! Right, that's been a rough ride. Oh, geez. Right, from 18 down to 8. That's a pretty nasty cut. Oof. All right, that's nasty. Down by nearly 60%. Lost more than half its value. Ouchie. Economic calendar. So let's have a look and see what we get. And this is the portion where after we're done this one here, we're going to flip and have a look at the earnings preview for these big companies. One second here. I want to see if we already have that earnings whisper. Here we go. Okay, there we go. We got it. All right, so let's look at this next week. We know we got Powell on Wednesday. Yeah, here we go, right? So FOMC, rate decision, right statement, press conference, all that good stuff, all that beautiful stuff. Oh, and we got preliminary GDP on Thursday. So that is going to be a big one. GDP measured, so this is the preliminary one, I'm pretty sure. Yeah, preliminary. So there's going to be a lot of stuff going on between Wednesday and Thursday. Why? Well, Tuesday we got these big, so we got potentially a bad earnings report out of Tesla with a good guidance forecast, maybe. Apple, and Amazon after. It's kind of, there's a lot going on this week. Yeah, so the big day here is going to be Wednesday, then overnight into Wednesday. That's Wednesday afternoon. And then Wednesday afternoon, we got some big companies here. Facebook's the most important one. PayPal matters. Ford matters a little bit, but it's really going to be about Powell. So Tuesday is going to be Apple. Then we got Powell. Then we got Amazon. These are the three most important ones. Tesla's going to be kicking it off on Monday, potentially with a disappointment. Or, again, I don't know which way Tesla's going to go. It's going to move, though. Let me just go back to here. I'm just thinking out loud right now. All right, 20 minutes into the video. That's not so bad yet. GDP overnight into Thursday too, right? Preliminary number, right? It's not a revision. That's a preliminary one. And then we got CPI here out of Europe on Friday. Let's This is a preliminary number. Yeah, preliminary here too, right? Looking for 2% growth. What are we looking for in the US? 8. Oof. We're going from 6.5 to 8. I already want it to be neutral in the week. Yeah, this is getting me a lot more neutral. I'm seeing the potential for that W to form now with the data. I'm seeing the potential that we could be getting that W into the first part of the weekend. I don't know what's going to happen for sure, but we could dump down on Tesla. So again, there could be some negativity from this over the weekend if that happens, or if Tesla disappoints on Monday, we could get a power dump back down, even if it's only back down to between 430 and 435, like back down into here. Right, it would be like kind of a W. It would be more like a cup and handle. I don't know for sure, but then I'm looking at, right? Or what if we go up into the first half of the week? Up into the first half of the week, like strong, because we've already had a strong move. We get continuation strong into Monday, Tuesday with Tesla and Apple. And then Powell says like nothing. But what Powell tells us is that we have to reflect stronger on GDP and initial jobless numbers. Well, then what do we got the next day? Well, literally both numbers, where initial jobless claims have been looking a little bit more poorly. And then GDP, or if we're growing and we're getting jobs, that's one thing. If we're growing and not getting jobs, something's, again, there's potential here. I don't want to re-review the treasuries because we went over that in the last weekend's video. Please go back and have a look at that one if you want to re-review it. But then we also got Europe. So again, Europe had a big reversal too with the DAX. So if they're going to hold on to that, they're probably going to need to have numbers that are not too scary for inflation. The ECB did say that they were looking to actually overshoot by 2%. 2% was the what they're aiming for. They actually want to overshoot it. So if that number comes in on Friday and it ends up being a scare, that could be a catalyst for here. Because again, it's preliminary. It's year over year too. It's not month over month. It's year over year. It's not the end of the world. It is notable for me too, though. At the same time, we're going to be getting German GDP. So I don't know for 100%, but as of right now, again, I'm just seeing that there is going to be a lot. This is going to be a really important week to determine the rest of the summer here. Okay, that's okay, right? We're not looking to try to convince ourselves one way or the other. We're just trying to figure out what's actually there. ETF review. Let's have a look and see. So let's pop over to here and just do this really fast here. So let's have a look at our ETFs, indices. Let's go like that. Let's just go alphabetical. Let's go to ARK-K first, which is momentum. So it looks like ARK is actually bouncing off of its, so like on its weekly here. I keep forgetting I have these charts over here. That's the weekly chart. That's the 5-minute chart. So ground higher into Friday here. That's the weekly chart. So we can see like it's got like inverse head and shoulders forming here. And then on the daily chart here, it looks good too. Inverse head and shoulders advancing off the 200 EMA. Looks okay. Volume's not there, but looks okay. DIA just pretty much range bound, not doing anything. EEM, stinky. FXI, stinky. That's China. Russell's just range bound, right? Doing nothing for a very long time. NYSE, same thing. Going nowhere for a very long time, right? Just shelving out here, just going sideways. Bitcoin, consistently going down, but I don't know, right? Trying to reverse, not sure. It's still got a head and shoulders pattern here. It's trying, right? It's above 33,000 right now. QQQ, unbelievable. And what's really important about here is that now it can just digest its previous all-time high. It's already put in a higher low here. It could go lower, but because we already have this this relative weakness in the most important companies year to date, I'm talking about Amazon, Tesla, and Apple. I think they're going to keep going up. I could be wrong, right? I could be totally wrong. I think they're going to keep going up. RSP going sideways, right? Not doing anything. Equal weight S&P. S&P with QQQ now actually advancing, bouncing off that 50 every single time. We'll do a deeper dive on SPY. TLT at the 20-year note, so coming down and then up a little bit, so down sharp on Monday. which led to the reversal in tech. TNX, again, advancing off the low. VIX, it's still in the teens, right? It's still going down, right? Still going down on the weekly, still pointing down on the daily here. Until proven otherwise, volatility is dying. XAU, we want to look at this one here on the monthly chart. So on the monthly chart, we're just right back to a key area here of roughly 1800. So here we can note that we were trying to reverse. We still have an inverse head and shoulders with a 1760 neckline, which goes all the way back to 2011 to 2012. And if we hold that area into the end of the month, I would assume this 1800 will be a pivot. We can break above 1850 and take out the 1921 previous all-time high over here, 1920.85. That should lead to a new all-time high. If we're going to be printing more, I would assume that going into the end of the month, I'm watching gold closely. Looking here on XLE, it is breaking down. I have not updated the chart. We already know that energy's been soft. We see that here with the M forming in inverse W. All right, more downside. XLF just going sideways here. We know we got share buybacks on certain companies, so should be able to at least hold. Utilities, put it in a cup here. Again, now utilities are generally going to be a safe haven. It's actually cupping out, bouncing off the 50 again. It looks bullish to me. XLV, advancing even more, right? So, boom. Bullish. Squeezing, right? Moderna. ARC, there we go, that's it. So what I want to look at now is actually going to be the earnings whisper report for these large companies. And I have that right here. So let's have a look at this right here. So again, earnings, we're going to be focusing on Tesla, Apple, and Amazon. Maybe look at Facebook briefly. So Apple has a whisper earnings of 117. We're looking with an estimate of $1, which means they would beat EPS by 17%. Year-over-year earnings forecast of 55% with revenue increasing 22. Short interest is decreased by 30%. The company is drifted higher by 10%. So there's a lot of activity for the 150 call. The stock is pretty close to 140 already for July 30th. Option traders are pricing in a 4.2% move on earnings. There you go. People are bullish. Tesla, a whisper number of 91 cents. Consensus earnings are for 96 cents, and the whisper number here is for 91, which that would imply a miss. Elon's been hedging a little bit too, so again, that's implying a miss of about 5%. And Tesla reports first on Monday. So the reason why this matters is because Tesla's going to set the tone for the rest of the week. And if they miss, that could be because of the Cybertruck. So Elon's already been saying, like, don't be surprised that the Cybertruck might be a flop. And then the Model S deliveries have been halted this week for some reason. They have a backlog too, though. And Morgan Stanley and Goldman Sachs were both bullish on Tesla. They've said, Morgan Stanley was talking about how that $100 a month subscription service might be worth more than their entire hardware business, which is their sale of physical cars. So if Tesla is already worth $600 billion and they're going to be including guidance on how they're going to make money off of that $100 a month, that could overshadow this negative EPS miss here. Might. I don't know for sure. Tesla moves big. We're expecting a big move. Option traders are pricing in a 7.4% move. That's big. So on July 21st, there was a notable 71,799 contracts purchased at 500 puts expiring on Friday. People are quite bearish on Tesla. Short interest has decreased by 33%. Meanwhile, the company drifted lower by 10%. So people have been covering as the stock went down. Finally, again, there's a lot of other earnings in here. We'll share all the stuff is shared in Slack if you want to read more. I'm just looking at, we're at about 30 minutes here, so I want to start wrapping up. Amazon is confirmed to report at 4 p.m. on Thursday, July 29th. The consensus earnings are for $12.16 per share on revenue of $115, and whisper numbers for $14.87. So $14.87 divided by $12.16. We're looking for about a 22% beat. That would be more than Apple, which would mean that if it came in at the line we're looking at here, that would be the biggest earnings of the week in terms of a beat. And Amazon's crushed every earnings, but they've not been able to advance. Companies, everyone's expecting a beat. Short interest has decreased by 21%, while the company has drifted higher by about 4%. It hasn't gone anywhere, right? It's gone sideways. So now if we have a look at those individual charts, let's look at Tesla first, actually. So Tesla first here, still has a head and shoulders. It's still not higher than where it was when it got included in the S&P at roughly 695, and there was all this forced buying over here, right? No bars compared to that. It's just the volume's dried up. It's got a W forming, but it's failed to form, right? It hasn't formed it. It keeps stalling out here. So we got a death cross, which is a lagging indicator, but it is negative. We can note that we are still pointing up on this blue line, so it's still pointing up. It has to break through the 695 area, though. People are betting we're going to be pushing back down to that 500 area here, if not lower, which would be a fail, right? That would be a huge head. We'd have a head and shoulders here. So I'm not 100% sure. Tesla, if they got that revenue thing that Morgan Stanley's been talking about, maybe it can go higher. It's gonna move big time. I'm just not sure which way. The chart is coiling up. So like a spring, it coils up, coils up, coils up. It's gonna explode at some point. Looking at Apple, Apple's winning, just like the Nasdaq, right? Winning. Whoop. Oh, jeez. The big difference here too is that what we're going to want to look for is this W pattern right here, which you can see that lasted longer and then it stalled out. So like it kind of stalled out here. Now this W pattern actually won. And we can note that we actually made a new all-time high. We made the new all-time high over here, and then we came back down and back tested the previous all-time high, which was actually a dead cat bounce and then rejected. So this time here, the fact that we're actually bouncing off the previous top signals to me that Apple probably wants more. I like what it's doing. Looking at Amazon here, again, like doing nothing for a very long time, and now we got that W in here, so it's winning. Right? It's winning. So cup, handle, pushing higher. Inside of here, are we going to form a W again, or are we just going to do push higher? I'm not 100% sure. I like all the charts though. They all look good, right? All at new all-time highs. Sorry, the A's, right? The A's are at new all-time highs. The T's, they too low. They too low. Market moving news, and then SPY. Let's wrap it up with that. I'm sitting at about 33 minutes. Not doing so bad. I was aiming for about 30. Looking on the monthly chart here, we are going to be closing this candle out. Yep. So the last trading day of the month. Let's have a quick look here, right? Last trading day of the month. It's going to be next Friday, so we're going to be closing out the weekly and monthly candle on Friday. Here, anything above 428.5 is bullish. We'd have to have a huge dump for this to happen. Not saying it can't. I'm just not really seeing too much evidence that, again, people are expecting it, betting against it. I'm going to wrap up in about, I'm probably going to need about another 5 minutes. Probably going to be about a 40-minute video. Anyways, monthly chart here looks perfectly fine. Anything above about 430 looks bullish on a monthly close. On a weekly close, anything above the previous weekly low of 421.92 would be a higher low. So anything above 422, technically bullish. Above 423 would be holding the 261 extension. As we noted before, when we bounced off that 261, right? We bounced off the 261 in the 50 EMA, which was the buy signal for us. So the last time that happened, just as a repeat here, is that here we have the 261. And again, just going back in time here, we got two Fibonacci extensions. So we got one from here and one from here. So on the daily chart, we're using the one for October, and the one for the weekly, we're using the September one. So you can just note that the 261 line is a little bit different on the daily and the weekly. And the last time that we did this, we have the October one, which is a little bit lower, which is why we have the lower 261. We came back down, had the 50 DMA and the 261, and we bounced off there, bounced a second time, went to new all-time highs. And then over here, we got the new 261, which is also matching with the lower channel, the 50 EMA, and that 261. So what I'm trying to say is that anything above 423 is quite bullish. because we'd be above that 261 and we'd be holding. There is potential for us to still push down to between 415 and 420 in the month of July. It doesn't seem as probable anymore, and like 425 is probably the 425 to 430 is probably now the buy area. Wrapping it up here, looking at the hourly chart, it's very bullish. So we just squeezed higher. We can see here that we got the opposite hour respected with a slightly red hour and then a green hour into the close. And green volume for the most part here, right? They bought the dip, they bought here, they bought that close, right? They bought the close, they gapped it up, they pushed it up. So it's a lot easier just to gap it up and prop it flat. And that's how the market goes. Okay, I think that wraps everything up. So looking over here, I think I'm going to leave it there. Here's all the levels for last week. We broke through all of them. Where did we close out? So I had 436 as the daily head and shoulders neckline. We even broke through that. Up, 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 up. Yes. So head and shoulders neckline here. Thank you very much for watching. I'd really appreciate a thumbs up if you're still watching here. And again, please drop a comment. That'll enter you for a chance to win the $100 Amazon prize on the next video we break 750 subscribers. Thank you very much. I very much look forward to seeing you next weekend.